All righty. Hello, and welcome everyone. My name is Felicia Terry. I am a realtor with eXp Realty. And today we're going to talk about the roadmap to a successful home purchase. This is going to be a guide for home buyers. I don't know how many first-time home buyers we have on the call, but whether you are a first-time home buyer or you're on your second, third, fourth, or fifth home, this is going to be some information that you would be able to take advantage of and use for the next time you purchase a home, or when someone else you know is getting ready to purchase a home, you can help them out. About your realtor. I'm Felicia Terry. I've been a realtor for 7 years. I specialize in new construction home purchases and first-time home buyers. However, I've helped people do many things like sell a home, buy a home. I've specialized in pre-foreclosures, probates, and things like that. But I'll tell you, I'm most passionate about helping people purchase a home just because it's such a rewarding feeling to help someone purchase a home. Plus, it's your biggest asset. So I love making people's home ownership dreams come true. Now, before we get into the meat and potatoes, I want to explain the difference between a realtor and a mortgage lender. All right, the difference between a mortgage lender and a realtor. A lot of people, they'll reach out to me and they'll have a question that is a better question for a lender. Or, sometimes they may ask the lender questions that they should be asking the realtor. So the job of a realtor is to facilitate the transaction. So we're going to facilitate the buying and the selling of properties. The responsibilities include, but are not limited to, market analysis report given by the realtor, sharing with you the property listing. So you'll let me know what you like, what you don't like, things that are deal breakers for you. You need a 3-bedroom, 2-bath, 4 bedrooms, minimum bathroom on the floor, whatever it is that on the first floor, whatever it is that you need, you'll let me know. And then from there, my job is to send you the property listings, showing and tours, negotiations. So whenever it's time to negotiate, you and I will talk and I'll tell you the best strategy. And then I'll go in and get in the ring and I'll negotiate with them. Paperwork. I'll manage the contracts, disclosures, and other necessary documents. Any support, offer you advice or guidance throughout the entire process. Now, your mortgage lender, on the other hand, he or she will provide financing for property purchases. So he'll advise you, on available mortgage options, such as, FHA, USDA, VA, whatever is more suitable for you. He'll be able to go over those things based on your paperwork that you've submitted. Pre-approval process. He's responsible for helping you with that. The application process, underwriting, closing coordination. He'll work with me, the title companies, and the attorneys to finalize the loan. And he will also explain loan terms, rates, and repayment plans. Now, what are the steps in the home buying process? So this is kind of a timeline, guys, that you can go by to know, like, okay, at what point am I in the transaction, or what point should I be in the transaction? First step is to get pre-approved with your lender. Okay, you all will set a budget, and then from there, once you have that done, got the paperwork, then you'll provide that to me, your realtor. From there, you'll meet with your realtor to discuss your wants and needs. Remember, we talked about that, and make a plan for success. So, hey, I need to live in Atlanta. My kids live in Fulton County. I need to make sure that they can remain in Fulton County. Next step, we will tour homes until you find the one that meets your need. Now, I always tell people, if I show you over 7 houses, we didn't do something right. We need to revisit. We need to sit back down, go back through the buyer consultation, and make sure that we find the house that you need, make sure we get the information so that we can find the exact right house that is designed for you and your family. When you find the one, you'll work with me to submit a competitive offer. Then we'll negotiate until you are under contract. All right. Then the next step will be to perform inspections. I can't tell you I've heard so many horror stories of other people whose client did not decide to get a home inspection because we can't make you get a home inspection. It's totally up to you. And yes, it does cost, a few $100s, but to me, it's like insurance. You're insuring this $300 and something $1,000 house. Well, it's not insurance, but I'm just saying that get that, because that way, if you know that it's some things that you don't want to deal with, like foundational issues or anything crazy that you or I can't see with the naked eye, then you can catch those things with the inspection report when they go out and take a look at the house. So highly recommend get your inspection completed. And then the appraisal, your lender will go ahead and order the appraisal for you. Next step is to make the final negotiation and repair request. We just talked about that after the inspection is done. From there, if there's anything that you do not agree with, then you can always ask for a repair request, or we can ask for credits. And we'll talk about that more just as well, like when we are in the process and we are at that point. Next step is to work with your lender and realtor through the process to make sure all needed documentation has been provided. The underwriter will take a look at all of the documents that you've submitted. And if he requires additional document, he may ask for it in order to get that clear to close. We love those words, clear to close. Like those are music to our ears when we hear that. We're not satisfied until we get that clear to close. So sometimes you can get all the way, a week or 2 weeks before, and you have to submit another document. A lot of times the pre-approval will last, for anywhere between 30 and 90 days. And so in that case, if you go closer to the 90 days, you will probably definitely need more paperwork because things could have changed. And the lender wants to make sure that when the bank approves you for this loan, that everything is still good and that you can still get the loan. Last step is to complete the final walkthrough. Yay! The favorite part. And close on your home. Yes. Got to go in there and do that final walkthrough, because if you had any repair requests, then you will want to make sure that those repairs got completed before you close on that house. Because once you close on that house, then, that will be kind of hard to be like, hey, you need to come back and fix this. No, we have to make sure that they did it ahead of time. So we'll do the final walkthrough typically a day or two before we close on the property. What's the difference between owning and renting the home? What are the pros and cons of owning and renting a home? So let's start with the rent. The pros of renting, well, renters usually don't pay, they'll pay a lower insurance premium compared to landlords. The initial cost typically requires less upfront money for deposits and fees. I think it's about 3 times the rent. And, with a loan, you can, typically pay anywhere between 3% to 20% down payment. Depends on what, is being offered at the time, what type of loans are being offered at the time to you. Maintenance responsibility. The landlord typically handles all of the repairs, so you don't have to worry about that as a renter. Now, the cons is, of course, the restrictions. So the landlord may not let you do a lot of things, such as hosting guests, running a home business, and, you can't do everything you want to do when you are renting a home. The rent payments, of course, don't go towards your mortgage. If you leave there, you can't steal the house. You just, you were renting for the time being. Rent increases. The landlord at any time can decide, hey, we're going to raise the rent. So what are the benefits? What are the pros and cons of owning a home? Investment potential. Real estate historically appreciates over time. So if you're in that house, you paid $200,000 and the house goes up to $300,000, then hey, you just profited $100,000. So the investment potential you don't get with renting a home. Stability provides long-term stability. You get to do what you want to do to it. You can paint it, add on to it, whatever you basically want to do to your own house. You can do it. Now, the cons, of course, is a financial responsibility. It requires financial commitment for mortgage payments, taxes, and maintenance. Less flexibility. Sometimes selling a home can take time unless you're, when there's a hot market like the pandemic, it was crazy. Like everybody was buying and selling houses. It was insane if you were able to witness that. And the market risk, property values can fluctuate. So just like it can go up, it can go down. I mean, the market did crash in '08. So, hey, but nobody have a magic wand to be able to tell you if it will go up or down. That's a risk that we take.
Felicia, if I can also add too, all the interest when you own a house, all the interest is tax deductible and you don't get that benefit with renting. So, for example, I own my own house. I see all that money, the majority of it back on my taxes. It's a huge way to claim and it just goes along with building wealth. So I wanted to make sure to throw that in there.
Love that. Love that. Yes, absolutely. Thank you. I appreciate that. So yeah, interest rates, can be deductible, right, Brian?
Yep. All that interest that you pay in your house, whether you're at 4% or 7%, is tax deductible. You get what's called a 1098 at the end of the year from your lender, and it shows how much interest you actually paid that year. So 17,000, 18,000, whatever, and you can claim that and deduct that on your taxes.
Nice. Thank you for sharing that. Another pro, guys. All right. So home buying myths. These are things that people, will just make up or, make it up in their head, or maybe they heard it and, just passing the message, right? You need a perfect credit score to buy a home. You need to time the market perfectly to buy a home. Renting is always cheaper than buying. You should avoid buying a fixer-upper. I can only own one home at a time and it must be a single family home. See that question right there, that thing there, that's something that, you would want to speak with your lender about, because that's not necessarily true. It's ways that, if you went to Brian, that he will be able to fix that up for you so that you can own multiple homes. I can use the cash I have saved at home to put toward my closing costs and down payment. I need a 20% down payment. Guys, these things are totally myths. And if you are wanting to buy, make sure you ask your lender, ask your realtor questions. Don't, just sit back and have that in your head, because no question is a dumb question. I know you all have heard that before, but it's true. No question is a dumb question. If you don't know, you got to ask. I mean, we went to school for this stuff, so that's why we know it. And plus, we are in the fields every single day. Now, 6 months before you get ready to purchase a house, guys, you want to be monitoring your credit score. You can use a free website like Credit Karma and just keep a check on it, because if there's something that's not yours, you can dispute it and get it on out there, and it can help to improve your credit score. So these are just some tips that you can use to improve your credit score. And I'm not going to touch into that too much, because that is what Mr. Brian, who will be touching on this a lot more. So I'm not going to talk about it too much, but I do want to share these wise things that you can do to improve your credit score without having to necessarily pay someone. So you want to keep your balance at or below 20 to 30% of your credit limit. Now, if you're trying to gain points quickly, reduce the balance to 10%. Okay, the lower, the better. If you have more than multiple cards, focus on getting the balances to $0 on all but 2 cards. Ask a family member or friend to be an authorized user on one of their cards. Only if it's in good standing now, because if it's not in good standing, then whatever they've done. So if they were 60 days late, then guess what? You were 60 days late. So really be careful with that. But if you can trust somebody, then being an authorized user on an account can really help. All right. And this is just more about improving your credit score. If you guys want to screenshot any of this, you can. You want to keep all accounts current, limit major purchases, and limit applications for credit. Ooh, please, if we're in the process of purchasing a house, guys, you do not want to be applying for any credit. No couches, no new living room suite, no new car, none of that, no new credit card. You cannot be doing that. It will hurt you. So what will a lender evaluate? These are some of the things that the lender will evaluate when it's time to get pre-approved for your loan. Okay, so knowing exactly how much you'd be able to borrow will help you set your budget and show the sellers that you're a serious buyer. Most sellers don't even want you to come into their house if you have not already gotten pre-approved. So these things are important to have your employment history, at least 2 years, 30 days of pay stubs. And I know that Brian will correct me if any of this is wrong, because I know that, things do change sometimes. And again, that's why, I broke down the difference between the lender and the realtor, because we don't want to be crossing each other. The previous 2 years of W-2s, and just screenshot this, guys, so that way you can have it. And again, just make sure that whatever your lender is asking for, those are the things that you're going to need, whether he's asking for something less that's not on here, or asking for lesser stuff or more stuff than what you see here. Set a budget, set a budget, set a budget. I think I've said that a few times. Set a realistic budget, okay? You got to live, guys. You got to eat. You got to have lights. You got to have water. So you can't just account for your monthly payment for your mortgage. Make sure that you can cover all these things when you are considering your home purchase. And the next step is, of course, to go house hunting. All right. So again, we'll talk about those things that you need during our buyer consultation, and we'll make sure that when looking up properties that it closely match your criteria. Can't always, some people, they really dream big. You can't always get everything that you want in a particular house, but we do strive to get at least most of the things. Come pretty close, I must say. And then we'll make your offer. You'll ask your agent to compare recently sold homes nearby to determine a fair price offer. Talk with your agent about including possible contingency stipulations in your offer. This may be, seller paid closing costs, repairs, or credits. And these are just things that I, on your behalf, will, be putting down for you and, sharing with you, and, just anything I educate you on. If you want to move forward with it, we do. If you don't, then we don't, because at the end of the day, this is your purchase. And then we'll submit competitive offers, set a date for inspections. All right. Again, I can't stress it enough. Inspections are important. Do not skip the inspection process, guys. It will help you out tremendously. I just had a young lady who got an inspection on a home, beautiful home. I was able to negotiate, I forgot now, I think it was about 40 or 50 grand off that property. And she got the inspection done, and it was a lot of work that needed to be done. Some major things that needed to be done, a whole new HVAC, it needed some roofing things. And those are things that we couldn't see. And then I, as her realtor, of course, I didn't know, because I'm not a home inspector, but these are just important things, guys, that we may not see during our walkthrough to take a look at the house. It looks beautiful on the surface, but when that inspector come in there and he is scraping it with a fine tooth comb, he will find some things in there that you did not see. And they'll even find some things on a new construction home. We just closed on a new construction home, and it was like 2 things, but it was really, really simple. And, of course, the builder, they fixed it, but we would have never known. Hey, we didn't know. So get that inspection. And last step, close the sale and move in. Yes, we'll do that final walkthrough, make sure they got all of that stuff done that we requested, and get on to that attorney's office and close on our beautiful home. So this is the summary here. Guys, you want to check your credit score. Keep an eye on your credit score. Get pre-approved for your loan. Find out how much to spend. Find the right real estate agent. You got the right one, right? Go house hunting. Make a fair offer. Schedule home inspections and close the sale and move in. So these are just some of the client testimonials my awesome clients have given me. If you want to see more of my testimonials, you can just Google my name, Felicia Terry. Make sure you spell it right. If you don't, you won't find me. And Google my business, and you'll see, a lot of my testimonials there from my awesome, very satisfied clients. All right. Now, if you are ready to schedule a free one-on-one consultation, guys, I encourage you to go ahead and scan this QR code right here. And I will be so happy to assist you, answer any questions that you have. And we'll be able to find out whether or not we are a great fit for one another. And that is the end for me. So guys, do you all have any questions for me on anything that I've shared before I bring up our awesome lender here?
Felicia, there was a question for you.
Okay.
Danny Steele did ask, why did you say 7 houses is too many? I've heard more than 50 being shown to specific clients. And that was, I tried to answer questions as we went along and you were speaking to me. That was one of the ones I wanted to let you take. Okay.
Thank you. I appreciate that. Okay. So I'll just scroll up then. Yes. Okay. Thank you. So yes, Miss Danny, great question. Why do you say 7 is too many? I've heard more than 50 is too many. Definitely more than 50. By that time, a person, the buyer is probably like, you know what? There's no houses out here for me. But when you probably heard that, I would guess that it was during the pandemic. Now, during the pandemic, it was crazy. That was a whole nother time. And I did show, oh my goodness, I think one of my clients, we showed her closer to 100 houses. Yeah. But you got to think about it. We're writing offers and then somebody else submitted an offer for 20 grand over. If I would have to guess, I'd have to guess that was the issue. Right now, we wouldn't have that issue. It's a different market. It's definitely a buyer's market right now. It's definitely a buyer's playing field. Like if a buyer want to buy a house, they have room for negotiation with these sellers right now versus then. You didn't have any room for negotiation. They weren't giving any seller concessions. They weren't going down on their price. What they asked for, they wanted it. They didn't care if it was worth it. It was crazy, 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 crazy time. Great question, Danny. All right, let me see. Benefits to rent to own. So the lower your credit is, the down payment is higher. Brian, I will let you take that one if you don't mind.
Yep, I did try to answer for Danny in there. Not necessarily. I can just kind of lead this in my information too. Okay. We have down payment, 0 down payment all the way down to 500 credit score for veterans. 580 is at 3.5%. And then USDA rural development, you can go all the way down to 600. So there's multiple options for low and no down payments, even for credit that's not necessarily perfect. So, the key, I think, is getting to really piggyback on what Felicia said, everyone, is make sure you get signed up for a Credit Karma where you can see not only your scores, but really your accounts and how they're reporting. And they'll update you monthly on any changes to those accounts. And even if you got your Credit Karma account set up, you could always share that with me and I could review it with you. There's 0 charge for it. You don't have to pay for Credit Karma. You don't have to pay for me to look at it and give you some tips on what to do next to improve your credits. But the key is to really start doing it 6 months before, like Felicia said, because if you have items to take care of, not only does it take time to do them, but it also takes time for a credit account to adjust once you've taken care of something. So for example, if you pay a credit card off today, it's not going to register for a minimum of 21 to 30 days on your credit and credit score, which means that's a full month right there. Your 6 months just went to 5, so to speak. So you're going to have to, you want to really build in that 6 months to make sure everything is kosher by the time you start looking at homes. Okay.
Great.
Any questions on that? There's between FHA and VA. Okay. Difference between FHA and VA. Number one, you can buy in any state. That's certainly okay with you. We lend in all states. I have not heard that Credit Karma is not a good business. I do know the credit scores can be somewhat inaccurate because they don't take into effect the same type of factors that lenders do when scoring you for a loan. The biggest thing with Credit Karma is they will get you updates on your accounts. That's really valuable. They'll show where they're at, if they've been late, how many months they've been late, so on and so forth, okay? The difference between FHA and VA is 0 down, all the way to 500. So all veterans are, as long as they're entitlement and they're entitled through the VA as a veteran, they can go 0 down. FHA is a minimum of 3.5% down. Now, FHA does have down payment assistance that you can attach to it to make it 0 down, but you have to qualify for that. So it's another set of qualifying guidelines. And based off of the qualifying we've seen, you need at least a minimum of a 620 to qualify for any down payment assistance. 29% of America has a credit score under 620. 29%. That's millions of people. A lot of lenders in our market with rates increasing are not calling people back, they're getting out of the business. We thrive on helping people with lower credit scores, giving them a plan, whether it takes them 6 months, 12 months, 2 days, 3 years. We want to get them a plan to turn them into a homeowner sometime down the road, because owning your own home is extremely valuable. With increasing rents, I don't think there's any end in sight to the increasing rents and the tax deductions and whatnot and the equity you can gain. I believe it's just invaluable to own a home. So that's the first thing.
To you. I'm sorry, Brian, I didn't mean to cut you off. Right before I hand it off to you, I want to make sure that it just says Zoom user. Someone asked for the QR code. I want to make sure that you're able to get this. Simone says that. Simone, are you able to see the QR code? It's actually 2 people that asked for it. One person directly messaged me. I just want to make sure that you all can. Okay, perfect. All right, there it is. Perfect. And from there, because we're getting a lot of questions about loans and credit cards and credit, and that's more of Mr. Brian's expertise. So I want to make sure I properly hand it over. Guys, I was going through, I'll tell you how I met Mr. Brian here. I was going through my husband's email. I had to get something out of his email. I forgot what it was, but I stumbled across this email from Mr. Brian Thompson. And I forget exactly what the headline said, but it said something to the effect that, did you know that you can qualify for a mortgage with a 500, or it says something like with a over 500 credit score, something like that. But it caught my attention because if you all have been knowing me, you know that I work with a lot of people who have challenging credit score, people who have needed a rent to own until they can actually own a home due to their credit score. And so that really, really, really stood out to me. And I immediately took down his phone number and his name. And I said, I have got to call this guy and I've got to get him in front of my people to share this information with you. So guys, I am excited and I hope you are too. Make sure you have your notepad to take copious notes. As you can see, Mr. Brian is very thorough already, and he's going to share exactly what you guys need to get this home buying process underway. So without further ado, it's 7:40. Woo, 7:40. I want to get Mr. Brian in. I know he got to get back. So thank you so much for taking the time. And there you go. Take it away.
Well, thanks for including me tonight, Felicia. This is pretty awesome. So we have a lot of questions. I'm just going to tackle the questions because I think that'll probably lead to the information I was going to share anyway. So one of the questions was, do student loans have to be in deferment to purchase? No, they do not. Student loans that are in deferment, each program looks at student loans a little bit different. If a student loan is in deferment, we will use typically 0.5% as the monthly qualifying payment. So a $10,000 student loan that is deferred, we'll use a monthly qualifying payment of $50 on that. If it's not in deferment, it will typically show on your credit report what your monthly payment is on it. And that's what we use. So typically it's either going to be the monthly payment that's showing on your credit or 0.5%, but neither here nor there in regards to purchasing a home. Regardless of whether it's in deferment or not, that does not matter. It does not help you nor hurt you or eliminate you, so on and so forth, from purchasing a home in the regards to student loans, okay? Do you have to pay off medical bills to purchase? You do not. Typically, medical bills will only show up in collections. I don't honestly think in 23 years I've ever seen a medical bill that has not shown up in collections. We omit all medical collections. We do not count them. So there are certain rules and guidelines about having collection accounts where you cannot have more than X amount depending on the program. Medical collections are thrown out immediately. Now, keep in mind though, just because we're throwing them out, they're still showing up on your credit. They're still negatively impacting your credit score because they're showing up as collections, most likely not paid or unpaid. So keep in mind, we throw them out, but it's not helping your credit because they're on there. Okay. Obviously you don't want any collections if you can at all prevent them. I have no credit cards. Do I need to get one? That's an amazing question. Credit cards can help you and they can hurt you. They are a great way to build credit. Just like any other account, if you don't pay them on time, they're going to negatively impact your credit. Credit cards, if you max them out, if you're never late on a credit card, but you have it maxed out and the limit's over the allowed limit, it will negatively impact your score. When you open a credit card, if you're trying to build your credit, because typically you would only get one if you are building credit, you certainly don't want one to go into debt. I tell my kid, who is now 17 or is he 18? He's 18 now, he just got one. He pays it off every day he uses it. It's only a $500 card. He just uses it to get gas. That's what I would tell you. to build credit the quickest way. Don't max it out, spend very little on it and pay it off the same day you use it. That way there's activity on it, it's being paid off, and you're going to see your score increase rapidly. The higher the balance allowed to the high limit, the lower it's going to bring your score. So a $500 credit card, if you have a $400 balance, it's going to bring your score down. $300 balance, it's not going to bring it down as much. 200, 100, and 0, you get the idea. It's going to really shoot your score up. So it's a great way to increase your credit score, but it's also a way that your credit score can be damaged. Okay, so keep that in mind, all right? Do you have to have a consistent amount of money in your account prior to purchase? Great question. You do not. Some programs will make you have what's called a reserve. A reserve, 1 month reserves is principal, interest, taxes, insurance. Basically, it's 1 month payment of whatever house you're buying. So if you're buying a house and your payment is $1,000 with taxes and insurance, 1 month reserve would be $1,000. And some programs will want you to have a specific amount of reserves in your account. But for the time being, when you start, no, you do not have to have a consistent amount of money in your account prior to purchase. And you can also put money in your account where it wouldn't hurt you. So if I put money in and I could properly document it today, it wouldn't matter that I didn't have any prior to that. I could use the amount that I put in today. Okay. One of the biggest things to know going into a home buying situation, like Felicia said, I really want to solidify this. The number one thing you need to go into is what's your budget? What is your monthly budget? What can you afford? Because you don't want to get yourself in over what you want, what you can afford. A lot of people will qualify for more than what they really want or what they're comfortable with. And that's not our goal here. Our goal is not to max you out on purchase price, max you out on what you can buy. Our goal is to keep you comfortable and not have you stress over making your monthly payments after you buy a house. I've had people do that and it's just a life suck for them. So that's really number one. In regards to credit, there's different types of collections. There's medical collections, we touched base on those. There's repossessions we typically don't take into account. It's when people give a car back. Any collections that are in like a credit card that goes as a charge off, you want to try and get rid of those at all costs. And sometimes you can settle them. It's really on a case by case basis. So collections we can tackle kind of off screen because it's really basically, it comes down to what kind of collections you have on your credit. Obviously paying everything, all your accounts on time each month is a big deal. That will help your score. So that's number one, getting them set up on automatic withdrawal. You can do that with auto payments, mortgages. Some credit cards will actually let you set up on a minimum monthly, but because the balance changes, it's sometimes can be a little bit more challenging. Keep the amount of cards that you have on a comfortable number. Don't go out and get 10 credit cards just because you're eligible for them. You want to try and keep them to 3 to 5 if at all possible. So in regards to collections, you want to make sure that they are, taken care of. Get your accounts set up on an automatic withdrawal. Credit cards, try to keep the number that you have 3 to 5. If you have a credit card in good standing, do not close it because it's positively affecting your credit. And that's a really big deal. Okay. You want to keep your credit moving forward. So try not to close them.
Mr. Dyers had a question. Can you ask the seller to pay closing costs?
Absolutely. Yep. Specific programs are different for how much you can ask for. It's typically 3 to 6%. And I would work with Felicia once you're pre-approved to go out and look and write an offer. We would all have a conversation together about what she thinks is a good number that the seller will actually accept, how much you should ask for, the cost that you're going to have for your loan. So yes, and I typically recommend that. If you can get some costs paid for, why not ask?
Oh, yeah.
That's right. I'll give you some tips and tricks and then I'll kind of leave the floor open. We already talked about Credit Karma. Do not max your credit cards out. We already talked about that. Keep credit card balances low. Automatic withdrawal. One thing that we do differently is I help the consumer or the client yourselves dispute old monthly late payments or old accounts to try and get them removed from your credit. The fact that even when you dispute them, it takes them out of negative standing until the dispute is done. So let's say, for example, you're 20 points shy of a zero down program and you have a $500 collection. We could dispute that and theoretically, just from the dispute, get 20 to 40 point increase on your credit, even if it doesn't get removed. We would just have to time it correctly to repull your credit. So in that window where your score had increased from the dispute, there's just different ways that we can help you with your credit. And there's still some questions coming in. Is it good to rent to own? You know, I've had clients that have done a contract for deed. And Felicia, you can also touch on this. I don't know how much experience you have, but I always recommend a contract for deed because if you file the contract for deed with the county, when you actually structure it to go into your own name, you can do it as a refinance instead of a purchase, which means you technically don't need a down payment or any more money when you complete that. So that's one of the ways that clients that don't have a lot of money have been able to get a house in their own name. You just have to find a willing seller. And Felicia, I'll let you touch on that too, if you'd like.
Yeah. So there's different ways of doing it. And that is definitely one of the ways, and probably one of the more popular ways, especially prior to the pandemic. I did a lot of rent to owns. I helped a lot of family into rent to owns during the pandemic, just because some people could qualify for a mortgage, but because it was so saturated with buyers and it was so competitive that a lot of my buyers who could qualify had the down payment, had the right credit score, had the pre-approval letter. They had to get a rent to own because it was just way too competitive for them. So in that case, renting to own was good for them. So every situation is different. I have some people will move down, they've never lived in Georgia in their life, and they say, hey, I'm interested in a rent to own because I want to get to know the neighborhood first. I want to make sure that this is somewhere that I want to, buy a house. I don't necessarily want to buy it right off. So in that case, a rent to own situation is good for them because they can rent for now, and then they can decide within a year, they can go ahead and make a purchase for that house, or when their lease is up, they can move out of that house and they're not obligated to stay there. And so every program works different. I have a few different ones that I was working with right now. I'll tell you, even, Home Partners Divvy, those are the ones that I was working with. They are not currently purchasing homes. However, they will allow you to rent one of the homes that they currently have. You could do either a rent situation or a rent to own situation with one of the properties that they already have. So to answer your question, is it good to rent to own? It depends on your personal situation. And I'd love to have a talk with you to go over what your thoughts are and your situation is, and then help you decide whether renting to own is better, or if maybe you can work with Mr. Brian here for a couple of months to get whatever you need together to be able to actually purchase a home, if that would be the best decision.
Yeah, I think the last thing, that was well said.
Thank you.
The last thing I'll leave you with is that we can finance homes with no credit score. So if you've never had a credit, no credit cards, no automobiles, when you pull your credit, it will show NA, which means not available. We can finance a home with 3.5% down on the sales price using NA credit, no credit score. So no credit is better than bad credit, but I don't want anybody to think that we don't work with credit that's been damaged. We will help you and get you on the right path.
Wow, I didn't know that. I thought if you didn't have credit at all, that you couldn't qualify. So that is great to know.
It's pretty cool. Yeah, we actually do about 2 or 3 of them a year. So you don't run into people very often that don't have credit, but it happens. So yeah, it's pretty slick. And we can build with no credit. We can get you on a path to get good credit too. We just give you the proper steps to take. Christopher Dyers, how do I take my money that I have paid for rent to go toward buying a home? Well, so Chris, are you getting money back after your rental? I guess is the big question. Or are you buying the home that you're renting? There's some different scenarios there that I think those questions would have to be answered before we could give you an answer to that. So I don't know if you want to type in there. If you're buying, I've had people that buy the house that they've rented before, and the seller or the landlord / seller that they're renting from will give them a credit or some type of for each month they paid rent or whatnot, a certain amount goes towards the down payment or whatnot. We can document that and use that towards your down payment. If you're just paying rent to somebody, okay, renting with options to buy. So it would depend on if the landlord slash seller is giving you any types of credits towards the purchase. That's what it would come down to. So what kind of contract or terms you have with the seller or the landlord. I hope that makes sense. And maybe we could have a conversation offline about it too. But it's possible, the easy answer.
These are awesome, great questions. I think, if they want to find you, Brian, what would be the best way to find you?
The best way is to text me or email me. I'm going to type my info in here for everybody. I really work all hours. I have 3 kids. My youngest is 6, so we're pretty busy, but I can always, if I can't get to something right away, I'll shoot you a text and say, hey, Felicia, I'll call you back in 15 minutes or whatever it might be, just so you know that I acknowledge that you called or text. But you can always email, text, or call, either way. And I'd be happy to help anyone get on the right track.
Perfect. So he's going to drop his information in the chat there. If you guys want to have a quick session with me, then make sure that you use that QR code to book an appointment with me, or you can take down my phone number and you can book an appointment with me that way. But we want to get, you in a buyer consultation when you're ready. So that way we can answer any questions that you have. And then also don't forget, you want to get that loan application completed. So that way you can know exactly what you need to do, anything you need to fix. A lot of times, you may be working on something that is not necessarily hindering you from being able to get a mortgage. So that's one benefit of completing a loan application, to at least know where you stand and what exactly you need to do.
Awesome. Well, thanks again for including me, Felicia. You're the best.
My pleasure. Thank you. You are the best. Thank you so much for sharing that awesome information with my clients here. And we got one more question before we go. Is it good to pay off the seller's debt and put money in their pocket, or can I buy them out their debt? Again, that's going to depend really on what you agreed to with the seller. So there's different, there's different situations. Like, sometimes you can get in a situation where you could do a lease option on a property, and, you'll say, hey, Mr. Seller, I'll pay you $1,500 a month, and, we'll take $200 on top of that. I'll give you $1,700, and the $200 will go towards my mortgage, or my down payment when I get ready to actually purchase the house from you. So in that case, then that money, that extra money, could go towards it if that's what you all agreed to. But a lot of times, that is not the case. If you're renting to own or doing a lease option, typically all of the money that you are paying every month goes directly to the seller, and you typically don't get anything back. But again, it really depends on what type of agreement, and hopefully you had, it under some type of contract that you read and agreed to. Thanks. I received a lot of good info, and I will be contacting you both at a later time. Thank you so much for coming, Danny. We appreciate it.
Yeah, thanks, Danny.
All right, guys. Well, thank you all so much for hopping on. I will be doing these on a monthly basis now. Make sure that I have your email address so that I can, stay in contact with you, and you can get some more gems that we drop on a monthly basis, so that when you are ready, you're well equipped and well educated on the buying process and what you need to do with the lending process. Okay. All right, guys. Thank you all so much. Oh, Danny said, Brian, where's your email info?
I just typed it again, Danny.
I wonder where you're putting it at. We don't see it. Make sure that it doesn't say to direct message. Make sure you know.
Oh, it does say direct message.
Yeah, you're messaging it.
User, everyone. Oh, okay. There we go.
All righty. Great stuff.
Thanks, everyone.
Thank you all. You all have a great night. Bye-bye for now.